President Obama continues his four-day trip to China. Our next guest says this could be the single most important trip of his presidency. Bob Froehlich is Senior Managing Director at Hartford Financial Services Group. He's been to China 8 times over the past 3 years and has China as his largest country that he's invested in right now. Bob, good of you to join us early on this Tuesday. I wanted to start by just getting your reaction to the latest, the meetings today.
Yeah, I mean, I think the issue is very clear that it's a two-part issue. One is about trade and about how we continue to push the global economy forward. I mean, these are the two powerhouses. It's about China and the United States and how do we get on the same page. And the other picture is the currency. I mean, it's that dual-headed sword, and both of those issues, they're sticky issues, they're not going away, they're very political issues, but important investment issues as well.
Let's start with trade. Is it as if the two sides present their arguments and respectfully their arguments are heard and no progress is made, say for China? The deficit seems to be the key word when we're talking about the U.S. economy.
Yeah, I think the deficit is going to be the issue that stops anything from happening, and because the deficit is going to only go away whenever the economy picks back up, and our economy is trailing the economy in China, the economies in Asia that are growing at double digits, and so it's going to take us time to work our way out of that. So that issue, I think, will be a sticky issue. But the significance is, I think we need China more than they need us. That's the political backdrop. I mean, I know in this country it's tough for people to realize that because we think that we are the most important. We need them. I mean, and if you look at what happened after the economy and everything crashed in March, it's their infrastructure spending that really got the global economy working again.
But just to bring this back to the currency story, there are some who watch currencies who say China would like to see its exports to the U.S. get back to the levels before the collapse of the markets last year, before they're willing to budge on this currency issue. To that, you say what?
Yeah, I don't think they're going to budge on the currency issue. I really don't. I mean, and exports are coming back. They can't come back as strong as they want because their imports are so booming because they're such a big user of commodity, which is another part of the whole story. So I think that they're going to gradually look at, they'll get those exports back, but, they're not going to have a big uptick in exports into our unemployment's not at double digits. I mean, there's one of the problems that until we fix employment growth, and it's a lagging issue, and that's going to take time before people are really buying everything that's made in China. They're going to have better exports in Europe than they are here.
You mentioned we might need China more than it needs us. What about investors? Investors have made money by having exposure to that Chinese market, which has been very hot. A lot of people wondering about if the S&P has hit its peak. What about Chinese stocks?
I mean, I think you have to look at China with a longer term view. And so, in other words, I would be in there because I like what I see happening in the next 3 to 5 years. Doesn't mean it doesn't go down next month, but the numbers are blowing people away. I mean, when your exports are up 40% and imports are up 80%, vehicle sales for the first 8 months up 125%. There's something really good going on there.
All right, Bob, we appreciate your time.
Thank you very much.
Thanks for joining us. Bob Froehlich joining us.